Hello, and thank you for joining us today. I'm Taylor Combaluzier, a mining analyst at Red Cloud Securities. Today's webinar features Aeris Resources Limited. Aeris is a mid-tier base and precious metals producer that has a portfolio that includes 3 operating assets and 1 development project, all located in Australia. Recently, the company has successfully extended the life of mine at its cornerstone Triton operations. Its other operating assets include the Krakow gold operations and North Queensland copper operations. Aeris also owns the Stockman Copper Zinc project, an advanced development project 300 kilometers northeast of Melbourne. It has a 10-year life of mine and all primary approvals. A DFS is expected for the project in the next quarter. It also owns the Jaguar Zinc copper operations, which are currently on care and maintenance. Today, I have with me on the webinar André Labuschagne, who's the executive chairman at Aeris Resources. The format of today's webinar will be comprised of 2 parts. In the beginning, André will provide an update on the company, and then in the second, we'll take questions live. So please send us your questions using the chat, and we'll get to as many as we can. I'll note that you can type them in at any point throughout the presentation. To start, I'll handle the disclosures before turning it over to André. For Aeris Resources, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the corporate presentation located on the company's website. For Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Aeris Resources specific disclosures. So with that out of the way, I'll turn it over to André to update you on the company and what you have to look forward to.
Thank you, Taylor. Good morning, and I'm André Labuschagne from Aeris Resources. The aim is to give you an update on Aeris. I'll touch on the last quarter results, but the main focus will be on the business as we move forward. These are just our normal disclaimers. As Taylor mentioned, we have 3 operating mines, which if you look on this slide, we got the Triton copper mine in New South Wales, Australia. We've got a Krakow gold mine in Queensland, Australia, and then in North Queensland, we currently mining the Mount Colin copper mine with a future project to start, which is called Barbara. On the projects, we have the Jaguar mine, which has been put in care and maintenance in June last year, which we're busy doing feasibility studies to bring that back online. And then we got the Stockman project, which the feasibility study, or as Taylor mentioned, will come out in the next quarter. All these mines have got opportunities to further discoveries, and currently we're forecasting to do between 40 and 50,000 tons of copper equivalent production from the operations. And I'll touch, when I go through the different mines, I'll touch on where we believe we'll come out on a guidance point of view for those mines. Just having a quick snapshot of the last quarter. So in Australia, we work on quarters from July to June. So we're in our 3rd quarter. Production-wise, we did 9,100 tons of copper equivalent production at an all-in sustaining cost of $5.31 Australian per pound. If I just touch on the operations, Triton had a bit of a challenging quarter, impacted by workforce. We had quite a lot of people off being sick, and then equipment availabilities has been one of the challenges. What we have done to counter that, we have brought in some contract labor, and also brought in additional equipment to ensure we can deliver on the Q4 results. The other 2 mines, both Krakow and Mount Colin, has produced along their current plans. In fact, Mount Colin is 10% better than planned year to date, and really we see both of those achieving the top end of their guidance and the lower end of their costs. At Jaguar and Stockman, feasibility study work is underway to come out with those studies in the next 6 months. Just at the group level, I'm not going to go into too much detail. Triton is forecasted to achieve on the production around the midpoint of guidance, where Cracow will achieve the top end of its guidance around 48,000 ounces of gold. And Mount Colin, production-wise, they are well ahead of the plan, but with Mount Colin, because we do toll processing, we are relying on Ernest Engine Mine to process our ore, and they are about one process route process behind plan. At a corporate level, a very small board. We are four. Robert Milner, who is representing our major shareholder, Washington Soul Patterson, at 31%. You can see the share price when it came off in July, August 2023. That's when we put Jaguar into care and maintenance. And when we did that, we also put a 40 million debt facility in place, and the market did respond well to it. In the last month, as you can see there, from March to May, or last few months, on the back of the increase in commodity prices, both gold and copper, we've seen a substantial increase from around 8 cents as it lowers to currently trading around 26 and at its highest 30 cents. So we are leveraged to copper price and gold price, of course, and we can see the value of the current prices, which is substantially higher than our internal forecasts, makes a big difference in how we can deliver the future. I'm not going to go into too much detail in this slide. This is sort of just putting the 5 operations in context, but I think the biggest takeaway there is within the portfolio, there's 850,000 tons of copper metal currently in resource, 1 million tons of zinc, and 1.4 million ounces of gold in resource. And each one of these mines has got potential to extend further. So, it's a great base to start from, with some real potential for long life, high production mines from Triton, Jaguar, and Stockman. And as I go through those, you'll see why I say that within the next 2 to 3 years, if you've got Triton, Jaguar, and Stockman online, you'll have three producing assets producing a significant amount of copper and zinc. This is sort of just give you a snapshot of the 3 operating mines right now. You can see Triton over the last few years has come off from 20,000 tons of copper, 25, as high as 25, down to 17. And now we're seeing it stepping back up. And the main reason for that is we've consciously invested in 2 new mines at Triton with higher grades than what we've been mining from the Triton underground mine. And so that increase in production is purely driven by new mines being brought online at better grades than what we mined before. At Cracow, that's our gold mine. We bought it from Evolution in 2021. You can see we always knew production will come down to around 50,000 ounces, and consistently over the last 3 years, it has delivered around that 30,000 or 50,000 ounces of gold. This year, we've invested in a new tailings dam that will give us a potential to further extend this mine life. And then North Queensland, the Mount Colin mine will finish by December this year, and then we will start the next mine, which is called Barbara. It is in a cash harvesting phase. All capital is spent. It's really just extracting ourselves out of this mine, and while we do that, it generates significant cash for the business. Just touching base on the different mines. So Triton still remains our cornerstone mine. It's been in the company from when we took over 10 years ago as a new management team. We currently mine the Triton mine, Budgerygar, Avoca Tank, and Murrawombie. So it is a portfolio of mines feeding a 1.8 million ton process facility sitting at the Triton complex. And then on the exploration side, over the last 3 or 4 years, we've moved our exploration focus to the northern side of this road. And you can see that Constellation deposit is a new discovery, and it has actually secured the future and the life of this mine. From 10 years ago, I said there's 4 years life. 10 years later, we're now saying that we think there's 8 years life. And Constellation discovery has given us that opportunity. Further than that, we are still doing exploration further north on the tenement package to see if we can find another Constellation. Currently, there's 4 mines in production. The Marwambi pit will come into production, or will start the pre-strip of that next financial year, and then Constellation, as I said, the new discovery will come in within the next 2 years, and that will then give us the opportunity to then further extend the mine life through the new mines which has been identified in Kurrajong and Budgery. This is just a snapshot of the Murra pit. So the Murra pit's a cutback. The idea is to start the pre-strip in Q1 FY25, so in other words, by September this year. It is it will deliver about 1.3 million tonnes in a very short space of time to the process plant. But what it also does, it gives us opportunity for environmental closure plans to ensure that we can close old heap leach pads effectively through using the waste from the pre-strip. This is the exciting bit of Constellation. You can see this is a current deposit, still open at depth. We had some spectacular intersections down the bottom about a month or two ago, 26 meters at 3.81% copper and over 1 gram a ton gold. It's still open at depth, currently about 7 million tons at close to 2%. The concept which we're working on, or the feasibility study rather, would be an open pit mine, and then you go underground. We are in the process, or will start this week, with drilling to drill this resource into an indicated resource so that we can bring out a feasibility study on Constellation in the next 6 to 9 months. So I guess summarizing, Tritton is now moved to from a lower grade deep underground mine at Tritton underground to new higher grade deposits, and we can see that Tritton will step up to that 20 to 24,000 tons of copper in the future. The next mine is the Cracow gold mine. You can see that little plant. Well, it's not a little plant. That plant is a very well looked after processing facility, doing about 500,000 tons of ore currently through the plant. The interesting bit on this slide is really this little graph on the bottom, where you can see when we bought this business in 21, the previous owners obviously stopped exploration, and you can see the resource dropped down to 340,000 ounces. The work we're doing is keep on drilling the Western Vein field where we're currently mining, and we can see the resource back to levels it was in 2016, 17. So it is one of those little ore bodies or mines which never got a long reserve life, but if you keep exploring, you keep finding and extend the life of this asset. This is just an example of, this is the current workings, the Western Vein field. Just in the last 2 weeks, we've identified a new ore body, which potentially a whole new vein structure, which will potentially extend the life even further. And each one of these is current targets of production going forward. The Golden Plateau deposit, which you can see on this side, is one of the new deposits which we've discovered, which we're busy drilling out and to bring into production in the next few years. Can you just excuse me? I just want to say something. My apologies, it's 6 o'clock in the morning, and I think my daughter decided to print something in the printer, so I have to stop the background noise. So Golden Plateau is one of the future mines which we will bring into production in the next 2 years, currently drilling it out and to turn that into a mineral resource. The Southern Vein field, as you can see there, the structures, the Western Vein field is where we're currently mining. Golden Plateau is 1 million ounces, and this southern part of the exploration tenements hasn't been explored or tested at all. So we have moved our focus to the Southern Vein field with a high potential that you can find further extensions of this gold fields to the south of the current workings. North Queensland, the beauty of this processor, or the mine we have, it's a small, what you see there on the photo, that's the footprint. It has been mined as a small open cut mine before. they've gone underground, and there's no process facility, there's no tailings dam. So from an environmental cost and closure, it's very small. And what we do is we truck it to Aeris Energy Mine, which is owned by Evolution. They process it, and then Glencore take it to their smelter in Mount Isa. This mine is in its final stages. We're extracting ourselves out, so we're mining the top end with a few more stopes coming out of there. It would have been finished in May this year. We've identified additional mining areas and additional stopes, and this little cave which we're running there is going longer. So we're getting around 200,000 tons more out of this mine. So it will continue. It was expected to close in June. It will now close probably in December with additional tons being mined out of the top end of this mine. So really great work done by the team to keep that going and identify new areas as we extract ourselves out of it, and seeing the benefits of the team focusing on the closure and getting out of this mine. So in the next financial year, we expect good cash coming out of Mount Colin, because it will just be mining for 3 months, and then the last process run will be done in November to extract to recover the final copper. The next one will be Barbara, so very similar to what was done before at Mount Colin. It's been mined as an open pit mine. We're busy with the feasibility study to do exactly the same. You go underground, mine Barbara out, truck it to, it was previously treated at the Mount Isa mine in Queensland, do exactly the same, and then start this mine up on the back of Mount Colin. So you basically take the team with the equipment and move them across to the Barbara mine to do exactly the same. So on the development projects, as far as you see there is the Jaguar mine in Western Australia, a very different landscape. The Jaguar mine, so a bit of history. So when we bought the business, so we bought the Jaguar, Mount Colin, and the Stockman project in the last 18 months. The Mount Colin mine, or the Jaguar mine, the Turbo deposit is what we were chasing down the bottom, and what we've done is to get to the bottom of the Turbo mine, we had to get development in place. The zinc price dropped by about 30%. We had to drop production on the way to Turbo before we could pick it up again. And the decision was made, instead of wasting resources down the bottom, that we actually stop the mine, develop a plan which will include Jaguar, Teutonic Bore, and Triumph, where we got an underutilized mill doing about 400,000 tons through the process plant, to push that to 650 by mining more than just one deposit. So similar to what we do at Tritton. And we believe that if you do that, you can end up with an 8-year mine life with around 20,000 tons of copper equivalent production. And that is how you turn this mine back into a profitable business. So the feasibility study is underway. We will bring out a study towards the end of this calendar year to update the market on the restart of the Jaguar mine. It has produced historically copper, zinc, and gold and silver. The whole focus is the restart. What we have done during this care and maintenance program is looking at the exploration tenement. So we kept a small exploration team at Jaguar, and the work they've done in the last 6 months around gold exploration on our tenements. Just to give you context, we sit in a 25 million ounce district with this tenement. So it sits between two gold mines currently in operation, one belonging to Red 5 and one to Northern Star. Now, on the tenements, we've identified 5 very good gold prospectivity areas, with the first one, Heather Bore, has already got a 2-kilometer shallow gold anomaly on it. We are very focused and see if we can start to do some drilling. The guys believe that there's a potential there for quite a large gold ore body. So the work is underway, and for the medium term, we're going to turn our focus to gold exploration while the mine is in care and maintenance. just on Stockman. Stockman, we inherited a feasibility study as when we made the acquisition. We're busy updating that feasibility study to turn it into a final study. But what we have identified when we started to pull the feasibility studies apart was there's a very good potential to go from the feasibility recoveries of around mid-70s to over 90% by changing the technology in the process route, by adding an Albion process into the system. So we came out to the market about 2 months ago and said, look, we will stop production, or we're going to pause the feasibility study, do the test work on the Albion process, and once we get that back, we'll finish off the feasibility study. Right now, the test work is underway, and the indication are very promising on getting those recoveries into the 90s on both copper, zinc, and gold. So quite a good outcome. We're expecting some results back in the next 3 weeks, and then we can start to update the feasibility study. The plan for this is 850,000 ton per annum mine, doing around 25,000 tons of copper equivalent. And currently there's a 12-year reserve life on it from just the one mine, and that mine is still open at depth, and there's another mine which we can bring in. So we see once you're up with Stockman, it will be 15 to 20-year mine life mine, if not longer. But it is finishing off the studies on those recoveries is important for us. I guess that sort of summarizes the business. As we said, 3 operating mines, all with significant potential to extend it, every single ore body we're currently mining, and then the 3 projects, Stockman, Jaguar, and of course Barbara, is the organic growth of the business. We always look for growth opportunities. We always look to how do we extend this business. And we can see the leverage on current copper and gold prices where it sits, especially in Australian dollars, does give us a lot of upside in this business to deliver on all these organic growth opportunities. Thank you, Taylor. That's me.
Perfect. Thank you very much, Andre. Great presentation. So with that, we will turn to our Q&A portion of the webinar. And just a reminder to everybody on the line that you can type your questions in at any point. To kick things off, maybe let's start at a high level. Do you have any kind of outlook on the copper space, or any comments on where we're at right now? Or
look, it's always an interesting one, isn't it? When the price, for us, we for example, budgeted at $12,800 a ton copper, and currently copper is nearly $15,000 a ton. $2,000 a ton on 20,000 tons makes a big difference. So my view is everyone has been saying for the last, we always got a view copper's got to go higher. Everyone expected it to start at 12 months ago, but I think what we're seeing now is perhaps the start of that penny dropping, that we need more copper. The drive for renewable is real, and we will see this. I don't have I start to stay away from forecasting, but I do think the current price is fair, and it should be probably higher, but you are where you are. But I do think there's a lot of investors trying to get into copper opportunities, specifically producer opportunities, and I think that's just where we will see the market going forward. And you look at what BHP is trying to do, it's all people are trying to get their hands on copper, and with that in mind, the premiums will come, and then I think that's my view.
Right. Yeah. Exactly. That's what I was going to bring up. Just the uptick in M&A activity. It's I think like you said, everybody's looking for copper right now. So it's hard to come by good assets. Especially there are the big guys out there, and then there's a handful of kind of developers or earlier smaller producers out there. That do have good valuations, but then there's a lack in kind of that mid-tier level, and the developers of good projects, it's hard to come by. So definitely people out there looking for those types of companies.
Yeah, I agree.
Yeah, perfect. Okay. So I know at the beginning we kicked off, or you kicked off talking a bit about the quarterly results for last quarter. Going into kind of the end of your fiscal year, you do expect a production to kind of to be able to meet guidance, and then going into next year, do you think you're set up well, kind of for next, as you got over those hurdles in the last quarter to continue going forward?
Yeah, look, I think that is the case. From production guidance, as I said, from a cost and capital guidance, we would be at the low end of our guidance, and some of the mines is actually way below their budgets or their guidance numbers. The operations are well set. Tritton has been the challenging mine because of the transition we made, and there was delays in starting up some of the mines. I think the focus which we've put in place now for Tritton, trying to simplify the business a bit, because we were trying to do all these little ore bodies and mining 5 or 6 areas at any time. Going into FY25, the main aim is that we simplify, focus on grade and deliver, and I think that will make a big difference. So yeah, look, we do believe that we're well set. Krakow has been delivering against plan for the last 2-3 years, so we got no problems there. We spent the money on the tailings dam, so that gives us, it was $15 million. That now gives us another 3 years of production without having to spend another $15 million or find different solutions for the tailings.
Right. Okay. And in terms of, I guess you talked about the toll processing, and they were behind on accepting batches there. I guess, how's the visibility there going forward? Is it, are things looking to get back on track and stabilize, or is it kind of, you're not sure on that front?
So we've done 2 things. They have given us now slots for June, for July, August, and November. So that will be the final process run. So that is locked in. But what we also agreed with Glencore, because you might remember in December we went to raise a bit of money to help with working capital, because Mount Colin costs you about $5 million a month, but you only get paid every 3 or 4 months, and that's a big working capital movement. But what we have agreed now with Glencore is that they'll pay us it's roughly about 50% of the value of the stock sitting at NSNG every month. So that took off that. So although you're only getting your final margin when they process it, at least you cover your costs on the way through, which helps a lot and makes a big difference.
Right. Okay. Okay. And I guess just, maybe looking a bit at the high level kind of corporate strategy point of view. You went through all the different operations in the presentation, gave a good outlook there. What's kind of how do you see the company moving forward once kind of the operations are nice and settled, and kind of these studies come out, the economic studies that you're working on, and those operations are kind of settled? Is it a turn to growth, or how do you envision that?
From an internal growth opportunity, you look at it, you say, well, within the next 2 to 3 years, you'll have Jaguar up and running, you'll have Stockman up and running, Tritton would have a Constellation up, and you'll have 3 long life assets doing together. They'll do, let's say, 70,000 tons of copper equivalent, if not higher. What we've always said, we want to make sure we optimize our portfolio, but also grow the portfolio. So we do always look for opportunities, specifically in the copper base metal space, to see how do we improve our portfolio of assets. Now, Stockman obviously will improve the portfolio. Jaguar, if you start it up the way we think, will improve the portfolio. But at the end, we always look for become that mid-tier player, which can give investors that opportunity to invest in copper gold business.
Right. Okay. And I guess at Jaguar, I guess one of the things that I was maybe you have a bit more detail on just the gold potential there, since that's kind of the focus.
No, it's interesting. If I can give the geologist money right now, they would love to draw that, because I think that's a potential company maker. Look, it is because it was always a base metal mine.
Yeah.
There was never focus on the gold really, but when you look at where it sits, and the work which was done historically by previous owners on gold looks really promising. Heather Ball with his the results from air core drilling before, there is something there, and the view from the internal view is that there's something potentially very large there. So it is a bit, if you find something, you've got neighbors who would obviously immediately be interested in it. But also it gives you that additional leverage within your business. So there's a lot of excitement around it. And as I say, if every executive discussion goes around, can we drill it? When can we start? So we'll see.
Right. Okay. Perfect. Okay. So at this point, I think I'll put out a final call for questions from the audience, and maybe as we wait for any final questions to come in, if you have any final key thoughts for investors, catalysts, or key investment ideas for why people should invest in Aeris, I'll give you the floor to wrap it up. And did you have any final words for investors, Andre? Or?
No, look, I think just from our side, we've had, to be very frank, a challenging 12, 18 months. We can see the improvement in the business coming through, and on the back of the improvement from an Australian dollar point of view, at least copper and gold. If you compare that against our internal plans, there's significant additional value in cash if these prices hold up for a while, and that would give us that leverage to execute on a whole bunch of stuff. So it's an interesting time we're in, and I think it's exciting time to be in the copper space.
Yeah, for sure. I agree. It's definitely the hot area right now, and people are always excited to look at good copper opportunities is what I find. So you're well positioned with Aeris. So. Perfect.
Okay.
Yeah, with that, I would like to thank André Labuschagne from Aeris Resources for taking the time to host the webinar today with Red Cloud Securities, and thank you to everybody on the line for tuning in with us.
Thank you, everyone. Thanks, Taylor. Appreciate it.